Macquarie goes bullish on gold. Hi, everyone, and welcome to another episode of Insights brought to you by Ainslie Bullion and the Gold and Silver Standard. Today, we welcome back Branko, who's been looking into the latest call by what is often referred to as Australia's millionaire factory, Macquarie Bank, and their outlook for gold. How are you going today, Branko?
Good. Keen to talk about today's topic.
Yeah, it's that one that I've often looked at Macquarie Bank as really that high level investment bank that makes some of these calls and has had a very successful track record, sort of here and internationally as well. So generally, what they say probably has a little bit of weight behind it. I mean, we can. We're always cautious of any predictions coming out of any bank, regardless of what type of bank they are. But let's sort of start off today by talking about the background and the reason behind Macquarie Bank's call on their expectations for gold going higher.
Yep. So basically, they expect gold to increase by nearly 10% in 2024. And they basically put out a note to their clients to encourage them to invest in a large amount of different ASX listed gold miners, such as Regis Resources, Genesis Minerals, and so on. Mm-hmm. So that was their big thing that they announced. And, to play devil's advocate, sometimes they probably have their position already in place. And then when they announce this, they get a bit of a boost. But the fundamentals behind what they're saying seem to be quite strong. And the main reason, which is kind of a common theme we've been discussing for a while on this show, is the central bank buying that's going around the globe, particularly in China, but across other countries as well, such as like Poland, Turkey, and Qatar. Yep. So basically did some analysis and said this is going to have a massive impact on gold in the next year and a half, and we expect big things. So get on the gold miners.
Okay. So the central bank thing, as you said, was something we've talked about quite a bit. Have you got some sort of context or data around how significant those central bank purchases actually are relative to the whole market?
Yeah, so one big one is China now owns about 4% of the world's gold, which is quite significant. And they've been buying basically every month for over a year consistently, and they bought another 23 tons this month, in July, sorry. Yep. So it's been very continuous, and again, we've seen a consistent trend, and the reason behind that is kind of two-pronged. So a lot of these countries are hedging that the US will print money, and then obviously that inflation goes up, that helps gold. And the other reason is more of a geopolitical one, where China is trying to protect their own economy and kind of fight this geopolitical war with the US. So kind of a two-pronged reason, but at the end of the day, demand is swinging. The demand for gold is strongly swinging, and the supply isn't necessarily catching up. So it is quite bullish, and Macquarie Bank did outline that on Monday.
Yeah, okay. So we've got that sort of bullish side. I know you tend to look at these things and like to look at both sides of the argument. So what do you see as the main opposing view here to what they're saying?
Well, basically, it was this economist, David, I can't say his name, Bassanese, who was just talking about how he thinks it's all rubbish, that it won't affect the gold demand, or it isn't having a strong effect now. Mm-hmm. But the important thing that even within his argument, basically he said that it's still kind of bullish for gold, even if these central banks aren't having the impact that Macquarie Bank thinks they're having. So in this statement, he basically said that, I don't think central bank buying is a major factor right now, but gold can rally if bond yields top out and people talk about interest rate cuts. So if we get a risk-on environment and the dollar weakens, then that'll boost gold as well. So I guess the important takeaway is, even in the counter arguments as to the central bank buying not being important, there is still quite a bullish case for gold, even given the current macroeconomic environment. That's kind of the key takeaway there.
Yeah. Okay. So that's sort of pulling that together. It's quite interesting. You're saying that part of the reasoning behind Macquarie's argument is that central bank buying, but you can, even someone who's saying, well, that may not be as significant, still can make arguments as to why it's still a bullish outlook.
And still believes that. So even though he doesn't think it's significant, still believes it's still bullish gold, but he just doesn't buy into the central bank argument yet. And I think that to some extent it is priced in because it's been happening for a while, but you can still see another way where if this trend just continues and continues, like that has to have kind of flow-on effects, because that strong demand wasn't there, 2 years ago.
Sure. So
it could be a slow grind.
So what if we're pulling that together? I mean, you're the person who looked into all of that. So what's Branko's outlook for gold moving forward? Like how do you piece all of that together? How does that sort of give you a framework that you can work with?
Yeah, I think if you look at, like, to be honest, Macquarie Bank has been very successful in these predictions. So I think it's no surprise that I think what they're saying is probably the most likely outcome, and their projections are pretty, reasonable projections of gold going up over the next year and a half. So I'd probably say that's going to happen. And then when you tie in some of the things with the US dollar, which maybe you want to talk about now, it does look likely that we do have a strong forecast for gold, particularly, again, if China continues its buying rampage, then other countries like Turkey and Qatar want to defend themselves against kind of US money printing.
Yeah, and that is an interesting one, because the US dollar, I know we were talking about this just before we came on. From my perspective, I've been quite wrong, really, on the short-term view of the US dollar, because I thought, obviously last year it was very strong, and we talked about that a lot on Insights, that relentless strength of the US dollar, and it just couldn't continue. It had to ease off, or people were going to find alternatives, which is all the discussions we've seen this year around things like the BRICS currencies and other ones. But the US dollar did pull off quite substantially from the end of last year. And what I've been expecting recently is for it to roll over again and continue that downward trend. And it's been holding up. It's been very frustrating to look at, because part of the reason I'm so interested in that is, I mean, I'm interested in Bitcoin, I'm interested in gold, and both of those I think will have a great response to the US dollar pulling back. It over the last couple of days, it looks like maybe that top is in, but yeah, every time I've tried to call that top over the last really couple of months, it just has kept going that little bit higher. It hasn't really taken off, but it's gone that little bit higher, which is very frustrating. So yeah, that's sort of my view on the US dollar there, is that it probably does need to continue lower. There's certainly a lot of issues behind what's going on in the US and their debt situation that would justify it going on.
Given the debt, it just seems unsustainably high. And I think that at some point we have to come to a point where things begin to turn, because it's just a very difficult situation at the moment.
Yeah, and I think that's the frustration that everybody has trying to read the market at the moment, because things that logically make sense will probably play out, but everything seems to take a little bit longer than we would like it to, or certainly that when you're watching the market every day, you're going, oh, come on, when are you going to respond? When are you going to respond? But some of this is quite slow to play out.
On that as well, like with to tie this back to, we spoke about Michael Burry a few weeks ago with his big bet in, like, he made that original bet in 2005, I think, and it took 2 to 3 years before he actually reaped rewards. So the thesis could be correct, but you don't know when it's going to click. So often you might have to stay in these positions, or often maybe you can't afford to stay in these positions for too long. So even though the general thesis might be right, it can take time. So that's why I think it's going to be more of a slow grind for gold going up, barring obviously some extreme political situation like the Russia-Ukraine situation we saw. I remember in the office when that happened, gold just obviously went crazy. So barring that sort of situation, we're going to see a slow grind for gold. And
and that's such a good point. This idea that the timing matters. It always is amusing. Even I fall into this trap myself, where you look and say, oh, it's not performing, like it's just not doing anything. And then you zoom out and you go, oh, well, actually, if we look back 12 months, or, not even 12 months, sometimes 6 months, or, just that little bit longer, you go, oh, it's actually done quite a bit. But when you're looking at it day to day, you're just always expecting the big exciting moves, and the big exciting moves don't come every day. When they come, they eventually come. Like we always
when they come,
see them. Yeah. Particularly frustration, and that's a particular frustration for silver investors. And we were talking about that. So last night we had the webinar for people who were new to Ainslie and wanting to find out more, that we have each quarter. about what we do and how we do it. And one of the questions there was talking about silver, and saying, is it, you've got to hold it for a long time? And it's like, well, sometimes you need to hold it for a long time, and other times it can move really suddenly. And when you look at the big outbreaks that have happened in the silver price, they can be very aggressive. That sort of compensates for all that time waiting. So that's the trade-off, right? Like you have to be in it and patient, but you get rewarded eventually. And that seems to be.
For whatever reason, sorry, even more than gold, when silver goes, for whatever reason, it just like rips. Like,
yes,
there's been times, it's just, I remember in the office, like we'll have all silver like in a week, and it's just completely ridiculous, insane doing. I think silver has like a very grassroots base. Do you know what I mean? Like,
yes.
A lot more retail. So when silver rips, everyone just jumps on it. Definitely not a slow grind. Like, I think silver can have crazy days as well.
Yeah. And that's a very good point. It can feel like a very slow grind while you're waiting for that to happen, but when it happens quite quickly, and it's hard to catch up.
That's right.
Yeah. Well, Branko, thanks for that today. Another insightful look at what's going on out there. And really, I think that's quite interesting to look at what Macquarie is doing in particular, because, as we sort of both agree, they have had quite a interesting track record of success in this particular area. So worth looking at, but also worth looking at those counterpoints you brought up. So very valuable. Thank you for that.
No worries. Thanks, Chris.
Thanks everyone for watching. Remember, if you've got any questions or comments, reach out on the social platforms. We always appreciate those. That's us for today. We'll be back with Sam tomorrow to discuss all things markets and metals. Until then, have a great rest of the day, everyone.